Friday. What's up, everybody? Friday morning, welcome to today's edition, Daily Market Commentary. I'm your host, Chuck Fulkerson. I hope everybody had a great week as we are wrapping up the week, and it's been a little bit of a down week this week. Frankly, a little bit surprising on the down week. I actually anticipated us to have a more positive week based upon our market conditions leading into it, with the Russell actually having the strongest week last week. But this week, we have been down a little bit. Not a tremendous amount, though. It's actually been a fairly slow week, in terms of normal weeks. So let's go ahead and dive right in. If you're new to the channel, do me a favor, click the subscribe button, hit the notification bell, and leave a like. The comments really matter. The likes really matter. So please do that. Okay. So looking at this thing on a daily chart, we have seen a little bit of a rollover from those highs. But last night, we did come back into this 240-minute zone that we've had identified now for a while, actually. Now, we did get a contract rollover. You see, we've switched over to the December contract. And looking here at this December contract, we tend to stitch these contracts together. And as we came down into that level last night from the Globex, we've traded up pretty much all night from that level. So that area has been an effective move up from that zone. So now what I'm going to do is I'm going to look and see, well, based on our 4-hour trend, we have got a lower low, technically a lower high. So I can go either direction. And let's see if this morning we continue to trade back down. Now, if I just look at the Z contract and I just look at the December contract, we didn't actually come all the way down to the origin of this move right here. We bounced a little bit ahead of that, but I don't believe actually it makes sense to utilize those. You want to use the contracts as they roll over and stitch them together with no adjustments. I want to see the gaps where the rollover gaps do exist. But coming up, I don't see any quality super strong supply levels either that I would lean on. And so in looking at this, none of these supply levels are enough for me to go, wow, look at how great that is. They're all there. They're all valid supply areas, but none of them are super exciting. So I'm going to leave this one in place, but I'm going to switch it to a confirmation entry because we just did a touch and go off of that zone. I will look and see if we break below some of these lows, if we're unable to keep setting new highs, we may get an intraday opportunity for a short out of something like this. And then heading into the weekend, remember, heading into the weekend, you always take a bit more risk, a bit more exposure. But as we are coming down, if you wanted to have, a position and hold it over the weekend, just make sure that you are hedged in that zone, noting that we're still in, as far as a daily chart, still in a fairly nice all-time high. We're pulling back to a prior area of resistance, which, oftentimes is going to act as a new level of support. So this could be a spot where we do pop up from heading into next week. So I would be a little cautious about holding shorts over the weekend, going into this coming week. Next, the Nasdaq. Looking here at the NQ on our 4-hour chart, we are chopping a little bit sideways on this 4-hour chart. Fairly slow movement. Not a whole lot to really talk about on this one. We did look at, potentially if we got basing below this line for a potential breakdown. Certainly no basing existed, but you did get a retest off of that area for a little move down. As it stands now, I just say that don't force anything in the Nasdaq because the Nasdaq's not really giving me a pretty good, a solid trade one way or the other. I'd say your best bet is a breakdown below 15,524 or a breakout above 15,708. And in between, nothing is super exciting there to get me to jump off the horse and start taking big trades. Next, crude oil. So crude oil, we had talked about, might we get a breakout above this line? And we did break above there, but then 1, 2, 3, 4, 5, 6 candles later, we had gone nowhere. Matter of fact, 7, 8, 9, it took a long time before that level finally broke down in. And so not a whole lot of great movement there in crude oil. And so now what I'm looking at from a potential pullback trade would be this area right here. Now, I like this one primarily because of the time of the day that it was created, um, rather than this area down here, which was created at not great time of day. So 68.75 by 68.59. Now remember, when we place those stops, our stops has to go outside the bottom of the leg in candle. So the tightest our stop could be on that trade, the absolute tightest would be 68.55. That's the absolute tightest your stop could be on this kind of a position. And so you've got about 20 cents worth of risk, 20 ticks worth of risk. So I need to make sure that my any basing that I would get in front of it is no more than 40 ticks above. I got to still give myself at least a 2-to-1 reward to risk opportunity. And then gold. Gold, we talked about staying in a range. Gold is still technically in that range that we had talked about, but it's definitely towards the bottom end of that range, and we bounced off of the lower end of that zone and actually didn't really move much from there. So I'm going to remove this line at this point. If you are still trading that range bound position, that range was this area here all the way up to this range. You might want to consider closing the bottom end of that range, especially with our kind of reversal candlesticks that we have today, or at the very least have your stop in place. 1810 is still a good reversal area if price does make it up to that area. Looking below us on a 15-minute chart, I don't see a whole lot of things to look at from a demand perspective to make me feel super confident about a long. You do have on a 15-minute chart a little supply area here that was formed that could make for a good move. All right. As far as our stock of the day, I really want to take a look as the markets have kind of rolled over a little bit. We've gone a little sideways. We're seeing that a lot of our stocks have as well. Looking here, for example, at Apple. Apple was one that we had talked about a couple of days ago, where we did get a pop up above our level in Apple that we had spoken about for a potential long, and we did not quite yet make it to our target, but the trade is still working out and doing okay. We're now 1, 2, 3, 4, 5, 6 candles into it. So at this point, it might make sense to move your stop to break even, allow that trade to still work, but take the risk out of that position. So if you joined us in the Apple trade, because we're not getting as big of a move as I had expected and we're getting a little bit of a pullback, take your stop, move it to break even, allow yourself to have a, we call it setting a free trade stop and allowing a trade to run. Netflix as well, we had talked about price getting above this region. Not a lot of movement has happened from there. A little bit of a move up, but not a ton. In Netflix, as I look at this one from a retest perspective, this area down here is a really clean area of demand, 553 by 544, on some sort of a pullback into that zone, and it's a prior area of resistance. So if you took the breakout in Netflix, it's moved a little bit. You've moved about a 2-to-1 on that one, but not enough to really, get super excited about. Google is sitting actually below a next breakout point. The cost of Google makes it a little bit cost prohibitive for a lot of traders. So if you're going to do this one, I would certainly say that the bull call spread makes the most sense. Don't be afraid of bull call spreads on some of those higher price stocks because you're playing the spread. It's still going to be an okay trade. So that's all I have for today as we head into this weekend. Everybody remember, if you're going to hold something over the weekend, make sure that you hedge it. You understand how to utilize options on futures positions in order to protect yourself. If you have any questions, please send us an email, support@tradersarmy.com. Till Monday, everybody. I'll talk to you soon. See ya. Hey, thanks for joining us. If you like what we do, please make sure you hit that subscribe button. It's the only way the computers know that you're actually alive and really care. And go to tradersarmy.com today to learn a bit more. And if you want to see some of our other videos, click here in the box.